sharpen your pencil and think about the thesis. Where is the price of uranium going to go? And I used to think that 140 would be, a decent top for this market. And in the last 18 months, it just seems to me that the market has proven that it does not care about 140. It doesn't care about 200. It could go to a level where we're going to be completely scratching our heads thinking like, is this even real?
Hey guys, Capital Cosm here. Before we start this video, I just want to let you know that I believe that we are on the cusp of a major uranium bull market. Now, these things don't happen every other week. The last uranium bull market peaked in 2007, the one before that in 1978. So when these things happen, you've got to take advantage of it. And how explosive are they? Well, you've all heard the stories. Uranium skyrocketing from $10 to $20, all the way up to $150 in these uranium bull markets. Where will it go this time around? Well, we don't know. We'll see. But you've got to take advantage of the opportunity. What better way to do that than to leverage Justin Hune's Uranium Insider newsletter? You get access to his monthly newsletters, his webinars, his stock picks, his portfolio, all of that stuff. You get access to guests that you may not see on YouTube. You get access to having them ask questions that you may not see anywhere else. So I highly recommend, if you're going to take part in this uranium bull market, you check out Uranium Insider. Link is down in the description box below. Be sure to click the link. There's quarterly plans, there's annual plans. So if you're kind of tepid, you're kind of hesitant, you could always go with the quarterly plan. Kind of test things out, sample things out, see if you like it or not. But the way I see it, guys, you've got to pick the right stocks. A lot of these uranium companies are not going to make it to the other side. Now, and Justin Hune's uranium portfolio has outperformed the likes of URA by a significant margin. Since 2019, it's up 5x from where it started. So click the link down below and we'll get started right now on the video. Thanks, guys. Hello and welcome to Capital Cosm, everybody. Today I have a very special returning guest on the show. It is Miss Fabi Lara. Fabi, thank you for coming on again.
Thank you. It's a pleasure to be here, Danny.
Always. So before we get started, nothing on this video is financial advice. I am not a financial advisor, so please do your own due diligence. With that said, Fabi, let's go ahead and kick things right off. Let's start it strong with uranium. Uranium is spiking, whether it be the metal, whether it be the mining stocks. What's your general take on the uranium space at the moment?
My take right now, as of mid-January 2024, is that I have sort of revised all of my mental models and expectations upwards. So if you go back a couple of years and you look at, what I was talking about regarding exiting the uranium trade and whatnot, I would always say, anywhere from 6 per pound, I would start looking to, maybe load off some stocks and think about my exit
Fabi,
strategy.
can you repeat that? Can you repeat that one more time? I think you cut off for like 2 seconds.
No problem. So anywhere from 60 to 80, if you go back a few years, in my older interviews, I would have said, $60 to $80 per pound is the level at which I would be looking at, starting to exit the trade and selling stocks. And it doesn't mean that I don't sell stocks when they run too much. I still do, and I do, partial sells. But to me, what has happened in the last, I want to call it 18 months, has revised all my numbers upwards and my expectation of where we're going ultimately. So now we're sitting at just above $100 per pound, and it feels more bullish than before this thing took off at 60. So I am now starting to think, okay, so I did not imagine that the story would have gotten so much stronger at 100. Now that it is 100, despite the fact that, yes, we do get euphoric, we do get, very emotional with our trades, and we think we're smart, and we think that this time is different. It's very difficult for me not to tell you that I think this time it's different, right? I think that there are certain things tightening within this market in particular, if you've been watching closely, that if you would have sold, during the 60 to 80 period, I think you would have missed most of the move. And now it's a matter of, okay, which plays within, this whole thesis are the safest for my style? Which ones am I going to be able to keep up with and be able to buy or sell according to, news flows and where the market's going, et cetera, et cetera. So yeah, I'm trying to readjust, where I think we're going based on what's actually happening from a fundamental perspective, because I did not expect the stocks to be finally catching up only after we crossed 100, pretty much.
Yeah, yeah. So we're at $106. I remember it's a week ago. We were at 96. I looked one way and looked back. It was $100, and same thing happened the next day. Just jumped all the way up to $104. And then now we're at $106. So when you say trading in and out of this asset, what's kind of like? Are you more into? Are you referring to like swing trading, like what exactly do you mean there? Like, is it more of like a long term, if I were to sell uranium at 60 and then get back in at 45 and ride this thing back up? Is that how you play it? Or
yeah, no, not exactly. I'm just looking at what stage of development am I putting most of my money into?
Got it.
Because I have always really, really loved the developers. And for a long time, they were the place to be, made a wild return with Encore. I'm still holding on to Global Atomic, despite the Niger coup. I'm up quite a bit on my Global Atomic.
I think you're back up to where you were before the coup now.
Yeah, which is just incredible. It speaks volumes, right? When the market is so strong that there is literally still, sort of a midterm coup happening. It's still ongoing. The decisions haven't been made as to long-term government yet.
It's a testament of how much confidence the market has on this thesis.
Yes,
it's willing to even prop up like a company within a
exactly.
jurisdiction that's literally in the middle of a coup.
Exactly. And it kind of makes you wonder, like, okay, so this has strength. Now, having strength is one thing, having legs and longevity is another thing. And whether we're going to have longevity or not goes back to the fundamental thesis. Now, there are a lot of typical mining guys that are really like gold and copper guys crawling out of the woodwork, and they're saying, and don't get me wrong, some of these guys are my friends and I really respect them. And they're like, oh, uranium is so frothy right now. Look at Twitter. Everybody's talking about uranium. And I think that part of it is just people being really jealous that, like we're finally being vindicated. And the fact that uranium has gone up quite a bit doesn't really mean that it can't go up a lot more and reach numbers that would have been completely ridiculous to you and I even 6 months ago. Now, the reason why I'm saying this is because I used to think that the market was going to spike up due to your typical retail rush, right? There was a strong story, like smart money gets in. And then after a while, stupid retail like ourselves, we go and pile on, and then the price just takes off, reaches a spike. I don't know if there's any science to this, but I try to look at bubbles and how long the very last leg lasts. It's usually like 3 months of euphoria. And so you have this crazy spike of 3 months, and then, it crashes. There's usually a dead cat bounce, and then that's it. It's over.
Yeah.
With this particular commodity, what is happening is that we see really early retail, then smart money. And now what seems to us, what's happening is that the people pushing up the price of the commodity aren't even investment players. They are the end users of the product.
Exactly.
And we have to remember that when you're buying most gold and silver, it's mostly speculation. When you're buying uranium, there is a slice of the market that is utility buyers that need the material. And whether they get it for 100 or 120 or 220 matters very little as long as they get security of supply. And so for us, we're all going crazy thinking, like this has gone up too quickly. It's got to come down. And the utility buyers are thinking, okay, I have a mandate here to buy this by a certain date. I have to secure my supplies. I need to get it. That's it. Point, like end of story.
Yeah.
And so I think that the final spike is really a spike of desperate people that absolutely have no alternative but to buy and bid the spot price up.
Yeah, that's a very good point. They don't have a choice. But then I look at the chart here that we've got shared up here. This tracks uranium stock search results, searches over the last 5 years. Over here, you had the big spike up in 2021. Remember that?
Nice.
And this is where we're at today. All of this euphoria, so called, only amounts to about 33% of that same euphoria from a couple years back.
It goes to show it's not a retail spike.
Nope. It's
exactly.
all, yeah. And I've pulled up, the same chart over and over again on this channel where you look at institutional investment over time on ETFs like URA, Uranium, et cetera. And what you'll come to find out is that as these things were consolidating for 2 years, the ETFs, institutional investment was going up. So institutional buying was going up. Retail was selling to, these institutions, these hedge funds, these family offices, et cetera.
Yeah.
And just now, over the last, I want to call it the last couple of weeks, is when you're starting now to kind of see a blip up in retail sentiment, but it's still nowhere near where it was at the height of September 2021.
You can also tell by the amount of new people joining social media and searching for this type of information. So I tried to look at, like John Quake's account every now and again and how many followers he has. And all of a sudden you'll see that he gains a ton of followers very quickly. I'm like, okay, retail is in, like there's new people, because let's be honest, he has such a large following in this space that if you're on Twitter, exactly, he's the barometer. If you're on Twitter, you may follow, some of these guys, me, a few other guys, but you will definitely follow Quakes because he sends out all the news regarding uranium and nuclear all day, every day. I don't know how he does it. Probably has like little gnomes, little elves working for him somewhere. But the fact is, like, for the longest time between that spike that you just showed on the chart until now, his growth has been pretty steady. Like you did not see an overnight or over the weekend, the big spike in his following. And it's not until then that I'm going to start looking at this as a really strong, like retail push.
There is a lot of positive sentiment on X, but it's mainly across the same people who have been on there for the last 2 years.
It's the same 50 people. Exactly.
Cool. Great. So you mentioned, you said it depends on, you were trying to pinpoint where exactly in the developmental stages that you wanted to kind of deploy capital into, whether that be, I guess, like producers, developers, explorers. Which one of those three do you currently favor the most right now, if you had to put in some capital?
So the correct answer going back in time, if I had the ability, would have been the producers from 2023 until now. I am going to raise not a red flag, but let's call it an orange flag, okay, on producers right now. Reason being, I am hearing rumors of difficulty with production, and some of these rumors are very public. Some of these rumors are not super public yet. And I'm not like, I can't get into the detail because I don't want to give away, like how I found out about this. But there is talk about producers not being able to meet their targets in a
Mm.
way that would be concerning to the market and would be enough for either, those producers to have to come to the spot market and buy, or for the simple fact that they're going to have to report this publicly to create some sort of concern slash panic, so that, utilities would have to come into the market to make sure that they get the supply they want, or have it be one of those rumors that starts, and basically, in order to capitalize on the possibility of this being true, financial players come in and bid the price up. So whichever way this is going to happen, the fact that I've been hearing it, from a few different sides,
Just in
I
regards to the
think
Kazamprom production cut, or is that it's something completely different?
it's something similar to that, but different.
Okay.
And don't get me wrong, I mean, I don't think anybody in the industry believes that Kazamprom is going to hit their previously announced 2024 numbers. So the fact
Mm.
that they came out and said, we're not going to hit, what we said. We think that there's a possibility that we may not hit what we said, I think is a given. The big question is, to what extent are they not going to be able to meet it?
Mm-hmm.
Because it's one thing for them to not meet it and for them to have a big enough buffer where it makes no difference in the deliveries and things just, chug along as usual. It's very different if any producer can't meet, a bigger portion of the targets and doesn't have enough of a buffer to cover it, and then has to come to the market. And if that somehow leaks into, the investing world before it happens, and they get front run by financial players,
Right.
then all hell breaks loose. And so, going back to your question, producers have done really, really well.
Yeah.
And I think that long term, there's always a space for producers. Big money looks at the Cameco's and Kazatomprom and whatever else of the world. That is always going to get a bid, as long as the company in and of itself isn't going through a major crisis. But because of these rumors, I wouldn't make that such a large part of the portfolio, and I would tread carefully. Then there's the developers, which is what I really have enjoyed playing all these years. When I go into like whatever new market, when I go into gold, and I'm starting to look at platinum as well, I like the developers usually more than, the other two ends of the spectrum. But right now, what I'm looking at actively is the nano caps. Whether they have pounds in the ground, whether it's historical pounds in the ground, or, compliant pounds in the ground, I do like to look at companies that, when it becomes a very euphoric market, as we expect it, as I expect it, I can't speak for you, but as I expect it to happen, the companies where people are going to look at it and they look at a $3 million market cap and they bid it up to 10, and it makes no difference because it's still a tiny little company.
Mm-hmm.
And whether it's 3, whether it's 10, it makes no difference, to the speculator. But for somebody who got in at 3, have it go up to 10 is a massive deal. So those are the types of companies that I'm looking into, deploying some capital. Now, I already hold a few of them, and I'm on the board of one of them. And, I have to always compare that one to the others before I put money in, because I know I'm going to be putting more money into my own play, obviously. But that's where I'm looking at right now. Just, I guess, buying a few lottery tickets, because I know from 2015 to 2016, there was a mini bull market in gold, and absolutely everything that had gold, even in the name, gold or silver in the name, did not make sense at less than 10 million. So anything that was less than 10 million got bid up to 10 million, right? It didn't really matter what you had. And so I imagine that something similar is going to happen to uranium, where we're like, there's not going to be a junior under $10 million market cap, because I've seen it happen before. And so those are sort of the numbers that I'm looking at, and the sort of sizes. And then it's a matter of, okay, like, do you spread it out? Do you go for, management teams that you like and trust? So it's a mixture of that, but nano caps are where it's at for me right now.
Publicly traded or private placement?
Publicly traded is what I'm looking at right now, because I don't want to wait for the best deal possible. And some of these management teams, I'm like, really, like that guy? And then I'm like, I don't want you to hold my money for 4 months. I want to be free to make a decision in case you come out with something really stupid. But yeah, no, I'm looking to buy into the market, and if good private placements come, then fine. But I don't expect them to get better because the market's getting hotter, and so I think financings are going to happen without warrants. And I don't think it makes any sense to buy into a private placement without a warrant. Most of the time, it makes no sense unless you're getting a really nice discount. So that's what I'm looking at.
I see. So, what are some of the key factors you look for in identifying these nano cap opportunities?
So what I want to see is a tight share structure. I understand that mathematically speaking, it makes no difference whether there are a billion shares out or 15 million shares. But there are other people who look at that and they go, you know what, 50 million shares is more manageable and it's more squeezable, let's put it this way. And then they will prefer to buy the 15 million share structure. I tend to do that mostly because other people do it, not because I think it makes any sense, because it shouldn't make any sense. But sometimes what happens is the fact that there are way too many shares out is a signal that the company has had to dilute so much that they don't even know who owns the shares. And so one thing that you will see, and this is something that happened to Myriad Uranium. I'm biased because, I'm a stockholder. They used to be a client of mine. I'm good friends with the whole management team. So with Myriad, I know who the people are who built the company, and I know that it's really tightly held. So a lot of the shares that you see there that exist, fully diluted, they're not available. They're not going to come to the market. And so when you see something like that, you're like, okay, so out of this, however many millions it is, I know that maybe half of this is not going to come to market, even if the price goes up. And surely enough, there was one day when they went up more than 50% in just one day. And that only happened because like there was nothing on the ask, because the people holding it are super long term. And so something like that has very little to do with the actual company assets plays a really big part if you're thinking about, okay, how high can this go? So that is one of the things. The other thing is, yes, there are some management teams with, either one or two people where I look at the names and I'm like, oh, okay, I bought a stock, where you were the CEO or chairman before, and you have proven to me that you can pay yourself really high salaries and just destroy the share price for many years. And I'm done with that. And so there are a couple of companies out there that I'm like, oh, I don't want to touch you. And so it kind of goes into my unofficial, I guess there's a blacklist and there's like a gray list of,
Nice way of putting it.
yeah, if I close my nose, if I grab my nose really tight, I might nibble a little bit, but I don't want to go in heavy. And so it's figuring out what that is for you. And that comes with, with years of practice of trying to buy stock and seeing what's out there. And there is also the other factor is the company, even though they may be on my gray list, like probably doesn't apply to the blacklist, but on the gray list, are they good at promoting, right? Because I don't expect tiny little companies to become the next Paladin like we had in the bull run,
Right.
where Paladin went from like $1 million market cap to like, I don't know, 1.5 billion,
Hmm.
because they went into production. I think that most of these companies are not going to go into production for a long time unless, the bull run is really sustained for a long time. and we can't control that. Like, we don't know if the price is going to spike up and crash. We don't know if it's going to go to a level where it's sustainable for the whole of the US to have a renaissance. I'm making a bet that it will have a renaissance of some sort, whether that's just in the stocks or the actual production. I have no idea, no crystal ball. But when you think of that, you have to remember, okay, so if this company is willing to promote, like, do they have a story that's sellable, right? Because I really think that the story of uranium being, of the, let's take the US, for example. So the US used to be the #1 producer in the whole world for uranium for probably a couple of decades back in the 60s to 80s. That is a sellable story because the pounds are there. And you have seen, maybe in the last, I want to call it 3 months, two companies that have come into production, small scale production, Encore Energy in the US, and now UEC is announcing that they're going to start producing in August in the US, specifically Wyoming as well. Okay, this is a sellable story of a jurisdiction that is coming back. It's reviving. The companies that are based in the US will get a benefit from that, even though they may not be doing anything of value to their properties. But it's a sellable story that is going to get around, and people are going to be more open to the fact that, the US is becoming more and more pro-nuclear, et cetera. And there's laws, being passed about, probably banning or rushing uranium and bringing things more in-house when it comes to the nuclear fuel cycle. And so, like, that's a good story. Now, if you want to sell a story that is, a complete pre-discovery play in an African country where there is zero uranium mining, therefore there is no law for uranium mining, that's a stretch, right? Because everything that's to do with uranium and nuclear has a very specific set of rules that is very much a lot stricter than anything else. And mining in and of itself is very strict regulations, but nuclear on top of that is even more. And so if you're trying to go somewhere that's completely new, it has to be something that's somewhat proven. It has to be, really great deposit or really great grade. The story needs to make sense for people who are going to come in the next few months or years or however long this takes, to look at it and go, okay, that makes sense. That is likely to go up. Are there comparables, within this industry where you could say, yeah, this company is cheap because that other company, look at where they are and what they have. And so having comparables is also really good. So it's a really, really long way of answering your question, but I hope that helps.
No, that was very good. Very comprehensive. So essentially, the nano caps have the highest torque, but at the same time, they also have the highest risk. So you've really got to spend the time to understand these companies, understand who these CEOs are, look into their backgrounds, look into the management team's backgrounds, and only then, would you be most capable of making a decision there. But I mean, at the end, you're still trying to scratch off a lottery ticket. So you really got to have that conviction, that put in the reps and actually studying these companies.
Let me challenge that about the highest risk. I don't think they
Okay.
particularly carry the highest risk.
What does?
If you go nano cap regarding just the size of the company, I don't think that speaks to the risk whatsoever. But if you go to an earlier stage of development, then yes, definitely that speaks to the risk of the company. So for example, to me, it's a lot safer to go for, let's say,
like $1 million nano cap, because there's like,
$1 million nano cap that is in a region where we know there is uranium, or they have a really old historical resource, but nobody really knows what it would translate to in compliant resources, versus a company that is in the best jurisdiction in the world for uranium, which is the Athabasca Basin or the Thelon Basin, but they haven't made a discovery yet. and the market cap is a little bit high. So they got room, to come down. And the fact that they are in a jurisdiction where you have to keep drilling and spending a lot of money means that there's a lot of dilution coming. And if the whole company is about making a discovery where there isn't anything proven yet, then that's where I put the risk. That's where I think, okay, that's the risky bet. So, I'm looking at companies in the Athabasca Basin, and obviously they're going to be naturally, the price is going to be higher. It's going to bid up because the investor is thinking to themselves, okay, if they find something, it's going to likely be high grade. Therefore, the price will run, which is absolutely right. But it's that if that really kills it for me, because the if could be they don't find anything, and most companies don't find anything, especially in the Athabasca. It's really hard to make a discovery there. And so for me, I'm like, okay, so this tiny company in the US, really close to a historical resource, or that has a historical resource, they don't need to come out with news every 6 months that says we found really high grade uranium, because that's not even the expectation. All they have to do is not mess up and not dilute too much, and just try to advance, maybe with permitting, maybe with, a drill campaign where they're going to be drilling where they know the uranium is already there, so that they're just, upgrading the resources from historical to compliant. To me, like, that is super safe. I can't think of anything that's super safe because it's small. If the company is not going to dilute too much, and they're serious about, either bringing that into production or bringing those pounds into, compliant pounds, it's very difficult to lose. Very difficult.
I see. This is a very nuanced perspective on things. Fabi, I want to kind of shift back to identifying sell signals.
Okay.
So remember, we shared this chart here of Google Trends, basically Google search queries over time worldwide. So I actually extended the time period all the way back to 2004. So it captures the big
Nice.
07 spike here in uranium stocks. So uranium stocks were most queried in that time. Now we had a spike of our own in 2021, but indexed alongside this super spike here in 2007. You only got about a half the volume that you got in searches that you did in 2007.
Mm-hmm.
And we're at what, 22% of that now,
which is shocking, because in 07, like, who was Googling
exactly.
anything?
Yeah. So like, who's using the internet to begin with? So like, this is something you've got to actually control for that too now. There's
Yes.
actually you could say twice the people are using, twice people are online than they were back in 04 or 07. I'd say
Oh,
more than
probably a
that,
lot more. A
triple,
lot
quadruple,
more,
etc. But let's just say double. We'll just be super
yeah.
conservative.
Mm-hmm. Mm-hmm.
That implies that here index at 22, if it's doubled, then that brings us down to 11. We're about 11% of retail sentiment as we were back in 2007. So that kind of puts things into perspectives. With that in mind, also, what other sell signals do you look for? And do the sell signals differ for, like, again, the nano caps, developers, producers, etc.? Like, do you sell off in tranches depending on the development cycle of these companies, or do you kind of, when you see like some sort of topping pattern in uranium in general, is that when you're going to just hit the sell button?
So, as we have learned in the last month or so, the stocks don't always follow the commodities super closely, and you can
Oh,
see my
you got a
cat
guess.
agrees. This is why she is, like, showing off here with her tail. There you go,
What's her
kitty.
name?
Her name is Bella.
Not commodity cat.
Yeah, the Bella the commodity cat. That's
There
it.
you go.
That's what she's called officially.
Yeah,
And
you just guaranteed like 10,000 extra views on this video now.
sorry.
Great job.
I'll call my dog in.
Yeah.
Then it will explode. So what I look for first and foremost is is the company basically has the company run too much for where the commodity is? Right. And so sometimes you see a really big promotion or, just a hot market. And then you're going to look at a company 3 months down the road, 6 months down the road. You're going to look at the progress they've made and the commodity price where it's at. And you're going to be like, nothing's changed. Why is the stock price up? It's probably running too hot. I might take a little bit, and take some profits. And the question I'm always asking myself, and don't get me wrong, I am not the best person at, like exiting beautifully. I usually take too long to exit. I do exit in tranches, but it's not as controlled or disciplined as I would like it to be. I try to make my entries really good. And so the question I keep asking myself is this cheap? And
Mhm.
at some point, what happens is if your only basis for something being cheap is comparables within the same niche, that to me is a red flag. If I'm looking at, Denison and I'm like, is Denison cheap? Then the only reason why Denison is cheap is because next gen is more expensive than
Yeah.
it, then I'm like, yeah, okay, but what about gold stocks? What about silver stocks? What about copper stocks? Are they cheaper than the uranium stocks right now? And at some point, you're going to say that to yourself so many times. You're going to see so many bargains somewhere else that then I think you start shedding just, the portfolio for this commodity as a whole. I like to still keep something in the market for the long term, just as a little bit of a ticket to see how high it can go.
Mhm.
It's very difficult for me to completely exit. But that choice has kind of been made for me because I'm on the board of a company. And so I am not going to sell that stock until I am really exiting the trade or we get a buyout or something like that. And at least that's the plan right now. And so for me, I'm like, okay, so this part of my portfolio, I really want to hold until, I really think that we've got something or we can sell the company. But what about everything else? So everything else is up for sale if I think that it's running too hot. But then again, you have to sharpen your pencil and think about the thesis. Where is the price of uranium going to go? And I used to think that 140 would be, a decent top for this market. And in the last 18 months, it just seems to me that the market has proven that it does not care about 140. It doesn't care about, 200. It could go to a level where we're going to be completely scratching our heads thinking like, is this even real? And so it's going to be a lot harder now, I think, for me to make decisions on my exit because I've had to update, my expectations so much.
Yeah, yeah, I'm in the same camp as you are. I see this as an opportunity that maybe comes across once, maybe twice in your life, and the risk is greater that you sell too early than selling too late. That's the way I
Yeah.
feel. I feel like that a lot of us are severely underestimating how high this metal can go. And I actually I saw that you mentioned what is it, the gold miners. So I want to show you this ratio that I
Mm-hmm.
just pulled up between URA and GDX.
Mm-hmm.
And despite URA's rapid ascent up, it's still
Wow.
severely underpriced compared to GDX as it was in 2011. This is Fukushima, pre-Fukushima spike.
Uh-huh.
So I would say we we're probably fair valued, or
Yeah.
yeah, or a little maybe
The issue I'm
undervalued.
having, the issue I'm having right now is that I'm researching other commodities and I'm looking
Mhm.
at tin, I'm looking at platinum, I'm looking at gold. I think that gold developers are incredibly cheap, more so than uranium developers. So I do like that segment of the gold
Mm.
sector. But when I look at, say, even, a tiny little market that could squeeze like platinum, like the story is good, but this uranium story is better. And
Yeah.
so it's difficult for me to be able to say, uranium stocks are overvalued because now you have to go back and like redo the financial projections for everybody, and in some instances change a 60 to what, 100
106 today.
exactly today. And are we going to flatten out today and just keep it at that? I don't expect it to go sideways at 100. I would like it to go sideways at 100 so that the market has a moment to catch some breath. I do not believe that it will.
Yeah. What's the timetable here? You look at these supply demand charts and they stretch all the way out to the mid 2030s. So like, in 2007, there wasn't a big supply demand deficit. It was precipitated by Cigar
True.
Lake.
True.
So, you had a big spike. Then do you think we're going to get a big spike and a big correction back down? Or is this something that's going to be a little bit more, have a little bit more longevity to it, given the supply demand deficit moving out into the future?
I think the answer is both. I think that we do get a spike because we have what I believe started to kind of ride the media wave, the beginning of a media, attention wave.
Right.
And with that, anything that happens, especially coming from producers, any supply destruction or big demand incoming might, really hit the price upwards in a way that we wouldn't even want. But I think that when it comes down, it's probably going to be like on speculative on the financial players, going in and out and doing that. The issue is if we are thinking about a commodities market where real supply is going to have to come back to the market in order for the price to come down, well, who's going to supply uranium right now that isn't booked up?
Yeah, it's not turnkey.
Where are the pounds? Yeah, where the pounds where the pounds going to come from if there's a supply crunch?
Mm-hmm.
Who has a bunch of uranium sitting in a warehouse that would be willing to part ways with it? And then you get into the whole political conversation of, are countries willing to part with their uranium? I don't think any company worth their salt, or any country worth their salt, in the current geopolitical climate that we're living in right now, part with their uranium and survive, politically speaking. And so it becomes a question of, okay, it can spike really high on both fundamentals and speculation on top of it, fueling it higher. But then when it settles back down, I think it's going to be a much higher level than what I expected to be before, which was, the magical number of around 60 or 70 or something like that. So I think we might settle higher. But I do think that a spike is absolutely inevitable right now.
What do you think about the term market the spot market getting way ahead of the term market? In the last bull market in 2007, that was a sell signal to get out. Do you think that applies today?
I think that the fact that the spot market is moving ahead shows you what kind of structure this bull market has come to, which is a very long-term, I guess, hubris-filled, lazy market of expecting the status quo, expecting the miners to come through and just keep producing really cheap pounds for long enough that financial players saw the mismatch and came in such a manner that the spot price, which is where they can play very easily, has signaled that the term market is going to have to move higher.
Right.
And so I think it just goes to show that because very smart fuel buyers weren't careful enough, to buy all that they needed when things were really cheap enough. And there are so many extensions now happening that were very unexpected even 2-3 years ago, that we're coming to a place where the financial players are going to have the last laugh, because they figured that, the market is structurally short, and the market being the people who actually need it, the utilities, the people who actually use this and have zero alternative. I hear of, even in the EV industry where they're saying that copper is going to be used a lot less than they first expected it, because they're trying to, change the materials, make it lighter, make it cheaper, etc. And so that shifts, the demand curve and projections a lot
That
with
seems like small
uranium.
modular reactors in our space that leverage.
Yeah, and with uranium, so the small modular reactor is in zero financial projections because it's just a bunch of designs. There's too many of them. The governments don't know what to do with them because they're new, well, new-ish. They're not really that new, but it takes forever for them to get approved. And so like we don't know how many there's going to be in the next 20, 30 years. And so nobody's really counting on them, but that could only improve the demand situation. There is nothing today that we can point to that is a market ready technology that is cheap enough to say, yeah, we're not going to need as much uranium to make, nuclear fuel. So really demand is going to go down in the next few years, or not as high as we expect it to. So it's a really sweet spot where the uranium market is at right now. And it's crazy to see it, because once you understand it and you try to compare it with anything else, it's just overwhelming.
Yeah, and when these stocks move, they move faster than anything else, bar probably crypto. Like,
Yeah, true.
nothing else
I mean,
compares.
I mean, crypto, you can't even compare crypto to anything. It's a completely
Yeah,
different,
yeah, but
planet. There's
it,
a reason why the stuff that they do in crypto is not allowed in normal securities. But despite, like, apart from that, yeah, the uranium has been wild, and people have been waiting for, 10+% days for a long time. And it seems like we're getting it now.
yeah, which is insane from an ETF perspective. I mean, name me any other ETF like URNM, URNJ that's a sub 10% day over day growth.
Yeah.
You can't
It's
find it.
wild, but we've been talking about this happening for a very long time. And for a long time, a lot of people who have come in at the wrong time have been wrong and lost money.
Mm-hmm.
Right. And so it pays to have conviction as long as it's getting stronger. The story in uranium has got so much stronger in the last 2 years. It's not comparable to anything else out there. There's no other commodity that I see doing as well as this.
So that's what you think. You think uranium is the best opportunity at the moment, or is there anything else that you see has probably a better?
I think that there are cheaper things in the market right now. I am not going to make a bet that those cheaper things are going to become fairly to overvalued in 2024. I think in 2024, the play to be a part of is still uranium.
Gotcha. Fantastic. Well, Fabi, we're closing in on an hour. I want to be respectful of your time. Where can people find you, Fabi?
Time flies, man. I feel like I just sat
Yeah.
here. People can find me by Googling The Next Big Rush, or they can go to thenextbigrush.com, which is where I have a daily newsletter talking about everything that's happening in mining on a daily basis. Or they can find me on X, also known as formerly Twitter. I'm at The Next Big Rush.
The next big rush sounds like it's going to be your uranium, right?
Yes, for sure.
Well, hey guys, if you enjoyed this video, be sure to hit the like button, subscribe if you haven't already, comment down below. Let me know what you think. What are your price projections for uranium in the years ahead? Would really be interested in getting your take there. I will try and comment on every single comment down below as long as you're respectful. With that said, guys, I will see you in the next episode. Bye, y'all.